this seems really intuitive, and to me, it is very frustrating. I don't understand. This is basic stuff. Yet we just, I guess, rely upon the Fed too much. People believe that they've got control over the rate of inflation. They don't. And if they really believe that they do have control, that's dangerous. Can I give you an example of a simple supply side measure that I think is really special? And it has nothing to do with Fed policy or Treasury policy, but it just happened in terms of like citizens of a city. So this is the example. And the example is the city of Long Beach in California. So Long Beach is the host of the largest container port in the US. And we all know about the issues with supply chain and the backlogs. And there's many container ships sitting outside of Long Beach waiting to get into Long Beach to offload. And this was causing a problem. And this is, again, a source of inflation. So the city of Long Beach had a regulation. And the regulation was that you could only stack 2 containers. And the reason for this regulation was that if you stacked higher, then the citizens of Long Beach couldn't see the ocean. So it was blocking their view. So the people of Long Beach said, well, we've got a supply chain crisis. Our city is the host to the largest container port, and we need to contribute. So we need to sacrifice something. And they voted to basically change that regulation so that instead of having a maximum of 2 stacked, you could have 4 or 5. And to be clear, this was something that, it changes the quality of life in the short term, in that you don't have the view that you used to have. But this was a choice that that city made, a short-term sacrifice for the city, but it had national implications. So in my opinion, there are hundreds, if not thousands, of things just like this that could be done to mitigate some of this inflation. Again, we need to know where to start. Okay, so the example of Long Beach's regulatory change is something that was just a grassroots effort. And that could be also useful to engage people, to convince people this is a crisis, and then everybody can contribute to mitigating this problem. But we also need some leadership. And one of the first steps is to figure out that this is actually a crisis. So for too long, inflation was brushed off as something that was transitory. But I think we need to realize that this is a crisis. We need to treat it as a crisis. And we need to deploy our economists to figure out all of the sources in terms of the components and to develop strategies from the bottom up. So really what I'm talking about is a bottom-up effort. Whereas what the Fed is doing is a top-down effort focused on the demand side. I want to go component by component and figure out what we can do to moderate the inflation in terms of those components. So I think that's the right way to proceed.
That's a powerful story and a powerful metaphor about the challenges we face and also the potential solutions that may be out there in terms of bottom up, as you say. And it certainly seems as though it would be, more productive for the actual real economy than having, more economists fiddling with dot plots, for example. But I'm curious, as you think about this, as you try and explore these types of solutions and think about where they might come from, do you have large functional buckets in your head in terms of what the causal categories might be for the challenges on the supply side? Just some overarching way of attempting to organize what some of those components that are providing these bottlenecks might look like.
So you're asking me. And what I'm saying is your question is a very reasonable question. And indeed, it would be my first question to all of the people where this is their full-time job. As I said, there's 400 PhD economists and many more employees at the Federal Reserve. I'm not sure how many at the Treasury, but this is the basic stuff that they should be doing. It's not really rocket science. It's basic. Everybody understands that if you've got a problem like this, you need to somehow develop a solution. And it can't just be one thing. You have to try many different things. And we're in the mode right now where, well, in the past, we've just used the Fed funds rate. Well, that's just not good enough. This time is different. Every time is different. And we need a holistic, approach to this and a serious effort. We're not getting that effort right now. Again, your question is very similar to what I'm asking for. So we've got all of these components of CPI, and we know what the weights are. We've already discussed one of the weights, 1/3 for housing. And the housing is complex because, for example, some of the housing demand could be mitigated with higher mortgage rates. So there's one instance where the Fed policy might have a positive impact. However, it's much more complicated than just the mortgage rate. You have to look at all of the materials and all of the other aspects of housing. And that's exactly what we need to do. We need to get people working on this right now. What are the sources? What are the most important ones? You mentioned the word triage. Well, that's exactly what we have to do. We'll identify all of the sources and which are the most important ones. And let's focus on those first. Again, this seems really intuitive. And to me, it is very frustrating. I don't understand. This is basic stuff. Yet we just, I guess, rely upon the Fed too much. People believe that they've got control over the rate of inflation. They don't. And if they really believe that they do have control, that's dangerous. So again, your question's an excellent one. You're asking the wrong person.
How do we get here, and how do we move to a point where we can start having these kinds of conversations? As you describe this story, it reminds me a bit of Warren Buffett's metaphor of financialization and shipwrecks, where you have a shipwreck, 20 people are stranded on a beach, and the 5 smartest people, instead of gathering food and providing shelter, start trading index futures on the performance of everyone else. It sounds like that's what we're talking about when we have some of the brightest minds in the country. And I'm not Fed bashing here, because there's certainly enough of that on the internet, figuring out how to position dot plots rather than figuring out, look, nobody wants to lose their view of the ocean. We get that. I'd be unhappy if I lost my view of the ocean. But when you have a global supply chain crisis, it makes sense to think about those trade-offs. We can do these things by working on the real economy rather than just trying to somehow create yet more unconventional monetary policy, new mechanisms of financial engineering at the state level. How do we get out of this pattern we're in, where the solution set seems to be narrowed by the way that we're approaching the problem?
Well, again, this is really complex because we have a government, we have a bureaucracy that is supposed to take care of things like this. And what happens? We put our trust into institutions like the Federal Reserve and then basically just give them the benefit of the doubt. So it's rare that the hard questions are really asked. And then we basically don't exert the same level of due diligence that we should. And as a result, mistakes will be made. And mistakes have been made, very serious mistakes. And how do we get out of this is a really difficult question. And part of it is just conversations like this. And for the average American just to realize like how ludicrous it was to have zero interest rates for a period of time that, again, was unprecedented with high growth, record stock market. It just like, what were they thinking? And to actually go through and to learn about the sort of implications. We're learning the hard way. And we shouldn't have to learn the hard way. Given all of the talent that we have in some of the government organizations, we shouldn't have to learn the hard way. And I'm afraid that this will be a painful episode. And we need to start conversations from the grassroots. So my example of Long Beach, I think is a powerful example because this was not initiated by the Fed or the federal government. This was a grassroots effort. So I think that it's reasonable in a crisis that you don't rely upon the government or the Federal Reserve. That people and communities need to take initiatives on their own. What can we do to reduce the rate of inflation? And I think there's plenty of things that can be done. But again, it's disappointing that we have to do this on our own, that our policymakers, I'll say this, and I actually believe it, though, is going to seem very strong. The crisis that we're in right now is self-inflicted. Maybe it's obvious from what I've been saying in terms of the mistakes that have been made in the past, but I really believe that a large part of this crisis is self-inflicted. Obviously, Ukraine-Russia war didn't help things, but it's not the cause. We had this problem before the Russian invasion. You cannot blame it on the Russian invasion. You cannot blame this solely on COVID, though COVID definitely did contribute to some of the supply chain issues. You cannot do that. This is a self-inflicted crisis, and that's very unfortunate.